Well, first of all, good afternoon, everyone, and thank you for attending today's press conference. Appreciate it very much. As you all know, sustainable investment plays a vital role in the growth of our economy. Investors in my district and across the country are increasingly considering environmental, social, and governance factors in their investment decisions. Data shows that in the U.S. there are currently $8.4 trillion in assets invested using sustainable investment strategies. And that number will only continue to grow. A recent Morgan Stanley survey found that over 80% of the investors plan to implement sustainable investment strategies in their portfolios. Well, what does that data tell us? What does it mean? It means that investors are interested in issues relating to environmental sustainability, such as climate change and a company's carbon footprint. They are interested in social issues such as human rights and fair labor practices, and they are interested in good corporate governance, including diversity at both executive and board levels. So really the market has spoken. To investors across the country, ESG issues are material and must be accounted for when making financially sound and responsible investment decisions. And that is why I am proud to announce the launch of the Congressional Sustainable Investment Caucus. This caucus exists to educate members of Congress about the market-driven benefits of sustainable investing and inform policy making that provides investors protections and market transparency. We will hold regularly scheduled events, briefings, and discussions with investors, fund managers, companies, and regulators. And we will support the ability of federal agencies such as the SEC to advance proposals, rules, and regulations that recognize the validity of sustainable investing. This caucus is broadly supported by organizations that represent the sustainable investment field, including investors, investment management, and advisory firms, asset owners, mutual fund companies, financial planners, and advisors, and others in the industry. Sustainable investment is here to stay. And as our economy continues to grow, Congress must work with regulators to ensure that market participants receive the information needed to make profitable and ethical decisions in our capital markets. I also want to give you my name in case I should have done it at the beginning. Juan Vargas. I represent San Diego, California, and my constituents are very interested in this issue, and I think we need to do a lot more. And I'm very proud of the people that are here and you'll hear from, and I'm especially proud of my co-chair, Sean Casten from the great state of Illinois. You'll see that he has been someone that has walked the talk. He has great experience in this issue, and we're very, very happy and proud to have him as a co-chair.
Thanks, Juan. Thank you all so much for coming. Juan is very modest and polite. What he didn't say but should be mentioned is that he led the effort on the ESG Disclosure Act last term, which we passed on the House floor. It included my smaller bill, the Climate Risk Disclosure Act, as a part of that package. And as you all have watched Schoolhouse Rock, right? The bill becomes a law by passing it on the House floor, and then the president signs an executive order, and then the SEC implements. And it doesn't rhyme, but that was what happened last term, and that was really Congressman Vargas has been leading on this for a long time and is the intellectual heft. And I'm going to come back to that, but start with the numbers. As we sit here today, there's about $8.4 trillion in assets under management in the ESG space in the United States. That's over 41 trillion globally, which is about a third of all assets under management. It's also growing. PricewaterhouseCoopers says the U.S. is expected to grow to about 10 trillion by 2026. The global market is expected to grow to 53 trillion. This is with a T. These are a lot of dollars. In the words of Joe Biden, it is a big deal. So the question is why is it growing so fast, right? Why should we care as members of Congress? And the first reason is sometimes this needs to be said, investors are people, right? They make decisions in the same way we all make decisions as people. And we make decisions on a whole host of issues that are not just limited to narrow issues of price. Show of hands, how many of you go to the deli and say, I want to buy only your cheapest meats, right? That's That's not a thing. You have a whole host of things that inform your purchasing decisions. And that's just as true when people are making decisions about wanting to invest in a company and make sure that that company reflects their values. It is also because it makes good business sense. Let me give you a couple numbers. As of 5 minutes ago, according to Google, which is never wrong, ExxonMobil is trading at a price-earnings ratio of 9.3, which means that if you have a right to a portion of Exxon's earnings, the share trades at 9 times that price. Chevron is trading at 10. It goes up, it goes down with the price of oil, but you get about 9-10 price-earnings ratio. NextEra, one of the biggest renewable energy developers in the country, is trading at a price-earnings ratio of 43, 4 times as high as ExxonMobil and Chevron. First Solar is trading at 190. The markets are sitting there saying, I trust these people with my money. I trust they are investing the things that are going to give us a sustainable future. And they do not trust the people who are running yesterday's technologies. Who would you rather have your capital invested with? The people who the markets trust or the people who they don't trust? Morningstar recently said that ESG funds have outperformed the broader market in 2022. Morgan Stanley has done an analysis showing that ESG funds generally do better in periods of volatility. And the size and importance of this space demands congressional understanding to understand those markets, to ensure access to those markets, and robust investor protections, and to make sure that we have transparent and consistent disclosures and definitions. But we got to be honest, we are also creating this caucus for defensive reasons. Because one of the oldest rules in Washington is that losers always cry louder than winners cheer. And when you see this capital flight away from yesterday's industries to the industries of tomorrow, yesterday's industries tends not to come to our office and say, thank you for making sure that we have robust capital markets that disciplined us with the what's Adam Smith's line about, the red in tooth and claw that made Darwin, but same thing, you get my point. They come out and they ask us for more subsidies. As we all know too well, when capitalism is working well but you're not winning, you tend to call it woke capitalism. It's still capitalism. And so we need to make sure that these markets are robust, that it works. And let me just say that if you find yourself thinking that we need to subsidize the fossil fuel industry more, we are not the caucus for you. If you find yourself thinking that the board of the company you invest in is too diverse, we're not the caucus for you. If you find yourself thinking, I wish Congress would focus on the gender of the M&Ms, we are not the caucus for you. But if you want to make sure that capital markets adapt, that are prepared for where markets are going, where demand is going, and that people can participate in those markets, we're the place that we want to be the intellectual clearinghouse for that. So thank you so much for being here, for kicking it off. Thank you to Juan for your leadership. And I want to turn it over to someone who actually has way more experience in the back end of this than Juan or I do, the former treasurer of the state of Rhode Island and new member of Congress, Seth Magaziner.
Thank you, everybody. I am very grateful to Representatives Vargas and Kasten for the invitation, but more importantly for the leadership in founding this caucus at a very critical time. In addition to my new colleagues, it is a lot of fun to be here with some of my former colleagues, former State Treasurer Colleen Davis, who you'll hear from, Lisa Wall, who you'll hear from, and Matt Patsky, who was my boss years ago when I worked at Trillium Asset Management. So my background is in ESG investing. I started out at Trillium under Matt's tutelage and then became State Treasurer of Rhode Island, where I managed our state's $10 billion pension system. And let me just frame this for people. The reason that integrating ESG into the investment process is important is because it strengthens returns for beneficiaries over the long run. When I was State Treasurer of Rhode Island managing the pension system, we had 60,000 people whose retirement savings we were responsible for. And we owed just as much of a fiduciary duty to the 23-year-old teacher as we did to the 93-year-old retiree. That 23-year-old teacher, their retirement security depends on environmental sustainability, on social sustainability, and it is only logical that we would make investment decisions that take environmental risk, social risk, governance risk into account. Because for that 23-year-old teacher and for all of us, Financial performance will be maximized over time with an acceptable risk if those factors are taken into account. So this is about helping people. This is about helping pensioners, teachers, municipal employees, firefighters. It's about helping nonprofit endowments. It's about helping real people whose financial security depends on their investment managers taking sustainability factors into account when they make investment decisions. And as Representative Caston said, all of a sudden, it appears that for some, I don't want to paint with a broad brush, but for some of our congressional colleagues on the right, they all of a sudden have decided to make ESG investing a target. No doubt because their donors from the legacy industries, the fossil fuel industries and others, are chirping in their ears about it. But when they do that, they do a disservice to those teachers, to those firefighters, to those nonprofit endowments, because attacks on ESG investing are attacks on working people who are counting on their investment managers to grow their wealth over time. And even if you don't believe that, even if you don't believe that incorporating ESG into the investment process is additive to value over time, you ought to at least believe in the freedom of people to invest as they feel is fit. That's the way capitalism is supposed to work. So it is incredibly intellectually dishonest for some of our colleagues on the far right to want to insert themselves into the investment process on behalf of their big corporate donors at the expense of working people when they claim to believe in free markets. So the founding of this caucus, I think, is well-timed, it's important, and ultimately it will help working people in this country get ahead over time by allowing them to build wealth in a sustainable way. With that, I want to introduce somebody who in ESG investment circles needs no introduction, who's been a leader and an evangelist in this space for a number of years, from US CIF, Lisa Wall. Lisa.
Thanks,
Thank you.
Good afternoon. I'm Lisa Wall, CEO of US CIF, the Forum for Sustainable and Responsible Investment. I'm honored to be here today in the company of my esteemed colleagues. US CIF represents a broad range of investors with $5 trillion in assets under management or advisement. Our shared mission is to rapidly shift investment practices towards sustainability, focusing on long-term investment and the generation of positive social and environmental impacts. Our recent trends report, which measures the size and the trends in the field, found that at the end of 2020, a number you've already heard a couple of times, there are $8.4 trillion in total assets under professional management using one or more ESG strategies in the US. Interestingly, particularly in light of Seth's comments about the fossil fuel industry, the number one issue for institutional investors and asset managers alike was climate change and carbon. That was the leading ESG issue they looked at in their portfolio. The investment field understands that climate risk is a true risk. The leading ESG issue in shareholder proposals was on ensuring fair workplace practices, particularly on ending de facto discrimination based on ethnicity and sex. Close behind the number of proposals filed were concerns about corporate political activity and climate change. Sustainable investors incorporate ESG issues into their investment strategies for multiple reasons: to create competitive financial returns, to generate social and environmental benefits, to align with organizational mission, to manage risk, and to fulfill their fiduciary duties, something that Seth just talked about with pensioners. Today's press conference takes place in the midst of a highly politicized environment in which there has been uninformed critiques of the field by some state and national officials. It is thus fantastic to be here with these wonderful colleagues in order to state the obvious. Sustainable investment is the mainstream of finance because investors that don't account for the environmental, social, and governance practices and policies of the companies they invest in are not adequately assessing risk and missing an opportunity to both make better investments and to contribute to a more sustainable economy, indeed the economy of the future. This is, of course, a very exciting day for us. I started at US CIF 16 years ago. back in the day when we were called socially responsible investors. Though we have focused heavily on public policy in order to change the systemic frameworks in which investors work, today's launch tells us that we have arrived at a new place, a place where policymakers at the state and federal level increasingly understand the value of sustainable investment and its relevance to public policy here in Congress. It's a pleasure truly to thank Representatives Vargas and Caston and their wonderful staff for their leadership in creating this caucus. I'm also grateful for their leadership on policy issues related to sustainable investment, such as the disclosure bills that passed in the House during the last Congress, and for their support for regulatory policies such as the SEC's climate disclosure and fund disclosure proposals. I know that with two of you at the helm, this caucus will be an important forum. We not only look forward to advancing the caucus alongside you, but also to ensuring a prominent investor voice on such issues as climate change, biodiversity, more equitable workforces, and better governance practices. I am honored to represent our members today and to be part of an event that will create at long last a congressional home for sustainable investment. Thank you.
Just want to make sure I'm next.
You're
Okay, perfect. Good afternoon. I'm Colleen Davis, Delaware State Treasurer, and I come before you all to really speak about what's impactful for us from the perspective of financial officers. I represent a number of financial officers at the state and municipal level who care very deeply about sustainable investments. And we want to ensure that we're speaking to the facts and material risk and what this actually equates to. And so again, speaking for myself and other state fiscal officers, we oversee over $2 trillion in assets across pension funds and other state funds. Myself included, I oversee about $11.2 billion in investments for the state of Delaware. And we share concerns of the misinformation regarding risk management. Again, I stand here at the ready to work with all of you to ensure that we are moving the needle in a way that, again, speaks to what's going on in the markets and the ways in which it impacts our fiduciary responsibility. I look at what happened recently in Texas as a bond issuing officer. It has a real impact on taxpayers. If you look at a study that was recently done by a group from Wharton, about a little over $530 million losses for taxpayers just in bond issuances alone over the last 8 months. And that is material. That has an absolute impact on taxpayers, and it completely goes against fiduciary responsibility as a fiscal officer. All of that is due to the fact that the state of Texas has decided, along with many others, that they will no longer do business with any bank that has a portfolio that includes an ESG or sustainable portfolio strategy. That means that they are restricted. We're not talking about a free market anymore here in America. We're talking about a market that is now closed and restricted, and again, costing taxpayers substantial money. And so I just want to ensure that that fiduciary responsibility and that duty to manage those risks are at the front line in protecting our state's funds. Those long-term projections equate to poor stewardship of our state funds. There's a lot of noise that's happening in the marketplace, and quite frankly, it's an unjust overextension of state resources, and it's irresponsible. I look to be a partner and want to underscore, as someone from a large family who ran a small business, I am very concerned about the lack of free flow of information in the market, and want to underscore that this activity that's currently going on, I would say, is contrast to the golden goose of what made America great and what makes American dreams possible. And again, as a fiduciary who has a number of individuals relying on our stewardship of funds, I want to ensure that the message of sustainable investment is factual. I stand at the ready to answer any questions that you may have, and I turn it over to you.
Thank you. Thank you, and thank you all for being here this afternoon. I'm Matt Patsky, the CEO of Trillium Asset Management, and I'm just I want to thank Representative Vargas and Caston for co-founding this caucus as a start, and then I just want to talk a little bit. I've been in the investment field now for 38 years. There is certainly, I don't think, a person in this room or outside who would argue that standardized financial data made easily accessible is important to investing. And what I will tell you about the history, and just try to connect for you why is environmental, social, and governance just as relevant. And Joan Bavaria actually started in the financial service industry. She was the founder of Trillium back in the 1970s. She was managing money predominantly for religious organizations and was incorporating their values into the investment process. She discovered that one of the, I would say, secret that to determining quality of management, which is one of the best key indicators of success of companies, was to ask questions beyond financial. If I start asking a management team about how they're handling recruiting, talent, and retention of talent, I get deep into their thoughts about how they treat people, right? If I start asking them questions about environmental impact, I start to understand how they think about their impact on the world around them, and likewise on social issues. And so she began incorporating environmental, social, and governance into the investment process in the 70s while working at Bank of Boston. And she founded Trillium in 1982 to exclusively launch a firm that incorporated ESG into everything we do. In addition, she added active ownership, which is if we believe that environmental, social, and governance are material, and we do, and we believe it actually will impact the sustainability of business models and shareholder returns over time, we have a duty, a fiduciary duty, to our investors to press the companies we invest in to improve environmental, social, and governance outcomes. So we have been an activist shareholder for our entire 40 years. So what Joan also did was try to build the field. And so one of the first organizations she co-founded was USCIF, which we're very proud to be standing here today with Lisa Wall from USCIF, and a very active member to this day. But long before that current use, of course, Trillium was the first one to really integrate ESG across all of its processes. Financial, environmental, social, and governance factors are all material, right? They're all material to the success of companies. We are a fiduciary as a company. I'm a CFA, and I would be in violation of my fiduciary duty to ignore any of these factors, right? I can't ignore financial factors, and it would be irresponsible to ignore environmental, social, and governance factors. Sustainable investing, simply stated, is about honoring that fiduciary duty to clients. We are thrilled to see this Congressional Caucus on Sustainable Investing being launched, and stand ready to assist in any way we can be helpful. Also, of course, very, very pleased today to see Seth Magaziner joining the caucus. And it is great to see somebody with the level of expertise. It's really important that policy be made by informed politicians. It is frightening, some of what we're seeing right now in terms of attacks on the industry that are very misinformed, right? And so in the United States Congress, you now have an expert, and I'm not saying that just because I trained him. You now have an expert in ESG investing, and there, hopefully that will influence policy that we see coming out of this body. But anyway, thank you.
Thank you. Any questions?
Questions? Happy to try to answer them.
How do you see these issues starting to play out on like the Financial Services Committee? And Chairman McHenry has mentioned that he's not a fan of the SEC climate disclosure rule, but some of these other anti-ESG efforts he's also maybe not on board with. I mean, do you see that? Do you see him as someone you can work with on these issues? I mean, is this going to be an unproductive kind of time for the committee, or can you advance some of these priorities that we're talking about?
Let me start. Then you go.
Yeah, go ahead.
Well, I think that we're going to have a very unproductive 2 years in a lot of things, just to be frank. But hopefully we can work with him. We'll work with the chair. I'm on that committee. I think, Sean, you're going to be back. I don't know about that.
I don't know my committees yet either.
You don't know? Okay. I hope you are. You really do have some expertise. It'd be great to have you on that committee. And we do get along personally, a number of us in that committee. And hopefully we will be able to work together. The things that were said here today, I agree with completely. I mean, these legacy industries, especially the fuel industry, the gas, natural gas, and petroleum, they're pushing really hard against ESG, and I think you're going to see that in that committee. But hopefully, we can work with them. It is a material fact now. ESG, they are all material, and investors care. And again, I'm very supportive of what the SEC is doing, but that's why we created this caucus. To be able to work together in a combined fashion, to be supportive of what the SEC wants to do, what the administration wants to do, and what I think we need to do to move things forward. Sean?
Yeah, I mean, the only thing I'd add is that I think I was pleased to see Mr. McHenry's comment. Not that long ago, the United States House of Representatives had a really exceptional speaker, and she liked to talk about managing the exuberances in our caucus, and I was glad to see Mr. McHenry sort of tamp down some of the exuberances in his. I think we work well with him, and he's a reasonable person. I would not anticipate that in this Congress they will be sending any directives to the SEC to work harder on investor protection or making sure that we protect against this, but I think we can be collaborative within the confines that they're managing. Hope so. Yeah.
How concerned are you about the plans of Senate and House Republicans to do target some of these ESG? I have a cold and not COVID, which is why I'm doing this. How concerned are you about some of the those efforts to target these rules through the Congressional Review Act process? We understand that there's going to be some resolutions through that maneuver, maybe even as soon as next week, relating to the Department of Labor.
The ERISA. The ERISA change.
We wouldn't be forming this caucus if we weren't concerned about the need to elevate. And I don't know what more beyond that to say, but unfortunately we need to play defense right now.
No, I agree.
Are you worried that there's a risk that it could have the votes to go to the president?
No.
No?
I don't think so.
Not in the Senate?
No, because honestly, everything will be stopped in the Senate. There's no way that something like that would get through.
Okay.
No, that's why I think we're going to have a very unproductive 2 years.
Got it. Okay. Thank you.
So, from a policy perspective, what are the priorities for this group other than playing defense and pushing back on the anti-ESG movement? And how are you planning to, accomplish those priorities in a Republican House?
So I think the beauty of a caucus is that all of us are going to have our own policy priorities that we want to amplify, and our agenda is to make sure that we have a robust and continuing ESG environment, that people can invest their money where they want, with the freedom that we expect as Americans. Now, what we each prioritize, for me personally, we spent a lot of time last Congress focusing on the fact that there's very little correlation between different ESG ranking firms' evaluations of given companies. And so what might we do as a Congress to develop some kind of with the SEC, with others, to develop standardization. That's my issue. I'm not saying that's our caucus. I'll be advocating for that in our own caucus. We've certainly got people with deep expertise in the space. But in general, trying to make sure that we continue to have the world's most competitive financial markets where people can invest. We're this massive, a third of all assets under management. We'd like that to come to the United States. We would not like it to say, let's go somewhere else where we don't have to worry about how many clowns are in the clown car.
Yeah, speaking just for myself, I think that the quality and standardization of disclosure is very important, which is why I'm glad that in the prior Congress, Representatives Vargas and Caston led on that. I will say, as a former practitioner, that was always a source of frustration for me, just as an investment analyst, to have to try to match apples and oranges, in looking at data. Longer term, another area that I would like to focus on is shareholder rights broadly. As Matt articulated, if you believe that ESG issues are financially material, which we do, then you have a duty to also use whatever levers are at your disposal to encourage companies to adopt sustainable practices. And sustainable investors like to use and often use proxy voting and shareholder proposals as a mechanism to do that. But the investor protections in the proxy process are very weak. These are, there's this whole kind of dance where boards of directors of companies go to the SEC to get proxy proposals thrown out. Depending on which party is in charge of the SEC at the time, then results can vary widely. These are all just advisory results anyway. And I would hope that something that we could come together on in a bipartisan way over time is that, this is an investor rights issue. Investors have the right, when they own a share of the company, to have their voice be heard and not be silenced. Nobody would dispute that if there is a single owner of a company, that owner has the right to do whatever she or he wants within the bounds of the law. No one would dispute that if you had 3 owners of a company and 2 out of the 3 decide they want to do something, they have the right to do that within the bounds of the law. But a double standard has been set up where a publicly traded company with thousands of owners, if a majority of those owners that own a majority of the shares want to do something, they're severely limited in their ability to even voice that opinion to the board and the management. So I think longer term, strengthening shareholder rights in the proxy process is something that I'd like to focus on as well.
Yeah, and I would also say, I think you had mentioned the ERISA, the ERISA rule related to being able to look at ESG funds and ERISA governed plans, as well as doing voting in proxies and shareholder engagement. And what I would say is that it's been a political football as administration changes. We get a new rule, then we get a different rule, and we go back and forth. And so one thing that I would love to see, probably several Congresses from now do, is to change the actual ERISA law so that it's very clear that you can use ESG criteria in selection of funds, and that being engaged as a shareholder is also allowed, because that would stop us from having to go through a ping pong of regulations and rules every time there's a new administration.
And I would just add that your caucus sort of raises the awareness to what we're talking about when we talk about material risk. And when you describe what so many investment portfolio managers are doing in the space of sustainable investing as woke capitalism, it's completely incorrect, and it's a fear-mongering strategy, and it has absolute impact on our finances and on the individuals that are paying their taxes or paying into their pension funds and expecting a long-term sustainable return from that, that long-term investment. And so I think that for me, and the reason I'm so excited that you all are establishing the caucus, is that you're elevating this conversation to the actuality of what's happening, rather than just a description of woke, investment.
Yeah, the last thing I would add is this. It was mentioned a couple of times about religious investing. I also come from a very large, very religious family, and we always were told about stewardship, stewardships of God's world. In fact, I studied to be a priest for 4 years, so really it is. And the truth of the matter, that is what this is: good stewardship of the environment, good stewardship of our society. But to be frank, there are some issues that pop up that we really do have to figure out. I mean, I listen to my colleagues on the Republican side, and most of the stuff that they bring up about ESG is nonsense. But some of the stuff that they bring up is not nonsense. The standardization, you know, actually, how do you measure when, you know, there's this long supply line? Well, there's lots of things there that we are going to have to think through and have our friends in the industry and the investment community help us with, because they are complicated, and hopefully there will be some goodwill on the Republican side to take a look at these, because again, most of the stuff that they throw out is nonsense, but some of the things are not. And hopefully this caucus will be a place where we can work on these issues.
I saw a hand in the back there.
I'll do one more.
Yeah.
Congressman Cass, I know last session you spent a little bit of time targeting the State Financial Officers Foundation. Are you planning to pick up those efforts again? And are you worried that there's, I guess that's what this effort is, but are you worried that there's maybe not this sort of similar organization on your end of this as there is on the anti-ESG end of this?
Yes, we intend to continue shining a light. For background for everyone in the room, the State Financial Officers Foundation is essentially sort of like the ALEC for anti-ESG, writing draft rules, getting states to intentionally stop funding or not deselecting fund managers who have a view of stewardship for their money. And what was really troubling last term was that a part of the funding of State Financial Officers Foundation was coming from JP Morgan, was coming from Wells Fargo, who actually were just disallowed from investing in West Virginia because of a rule written by the State Financial Officers Foundation. And we could not get Charles Scharf and Jamie Dimon to say we're going to stop funding this group. So yes, we're going to keep the pressure up. And you know, as far as whether we're succeeding, I think there was some positive news from State Street this week. You know, so I think there are people who are taking this seriously. And you know, and I just, you know, I've said this on several occasions, but you know, as long as we got a bunch of press here, I'll say it again. If you are the head of a major bank who believes that it is not in your interests to do anything that might reduce your short-term share price or alienate, you know, someone of a different political persuasion, then if nothing else, you are not managing an ESG compliant bank, and we should probably take that bank out of any ESG funds. Let's put them in a position where they don't have access to a third of assets under management for the world, and see how they feel, right? Live by the values you preach, and we'll keep that heat up.
Along that same line, I mean, what do you see as any kind of ripple effects or fallout? I mean, you have these Republican states that are saying, don't do ESG. If you do ESG, we're going to blacklist you. And there are other states, meanwhile, saying, please do more ESG. If you don't do more ESG, we're not going to do business with you. I mean, is there a danger in that kind of bifurcation between states? I mean,
so I just make a quick comment, and I don't mean to monopolize all the time. If you have something that is generating value, like remember what I said about like First Solar having, you know, trading at a massive multiple relative to Exxon, and you have somebody who's dumb enough to say, I want to get out of this, that sounds like a good opportunity for buyers, right? Like markets are going to impose vicious discipline on it. And it's going to be a problem. It's going to hurt people, like you had said, who, like the people who are the casualties of these decisions don't have agency in it. It's the firefighter expecting a pension, right? But markets will self-correct in response to stupidity.
Well, and I think sunlight's a good disinfectant, right? And so that's why I'm glad that Rep. Casson has shined a light on this particular organization, because when I started as a treasurer 8 years ago, and I think Treasurer Davis would back this up, this was not a controversial topic among Republican and Democratic state treasurers 8 years ago or even 4 years ago. You know, when it would come up, you know, some of the Republican treasurers may say, I don't know about that ESG thing, I don't think I want to do that. But there was sort of this understanding that this is a free market, and if other investors want to do this, then, you know, they ought to have the freedom to do it. And it was really just in the last couple of years that all of a sudden, kind of out of nowhere, you have treasurers, comptrollers, others on the Republican side taking this very hard line and inserting themselves into the free market process to the point of saying, not only do we not want to do ESG investing, but if you as a bank help anybody else in the world do it, then we're blacklisting you. And it's a complete 180 from what we were hearing from Republican treasurers even just a couple years ago. And if you want to know why, you follow the money, right? It's because, the fossil fuel industry, other industries are funding a specific strategy in order to try to do this. And it's no different from tobacco companies, spending money to spread misinformation about their products, or fossil fuel industries funding climate denial. It's the same thing. And so I think the more we can shine a light on what's actually going on and what the real motives are here on the other side, the more people will realize that it's a whole lot of nonsense that they shouldn't subscribe to.
And
I was going to say the real reason, right, is we are seeing an increased cost of capital to industries that are really carbon intensive.
Mm-hmm.
That is starting to happen because of the amount of money that is looking at these factors. So there's success in steering money toward lower carbon intensive, right, industries. Most of what we're seeing right now is complete political theater, because none of these states are looking at ESG factors in their pension plans previously, now, or were planning to. So telling me that you're barring me from actually managing the state of Texas pension plan, who cares? I wasn't going to win a mandate from the state of Texas. They're not caring about sustainable factors right now. Now, that could happen in the future, but it would take considerable change in the leadership in the state of Texas for them to care about sustainable investing. So, when they talk about, I'm going to ban, it is true, they're banning companies that are generally providing them very low cost index product. So BlackRock has $2 billion pulled out by, that was at 1 basis point. They're 10 trillion. It's a blip. What they've decided to do, and I think it's the right decision, is they're basically standing their ground and saying we're going to continue to offer ESG integrated product for the clients who want it. They also offer index product, and the index product is what's in the state treasurers, or in the funds of the state treasuries of where they're talking about pulling assets. And so it's a calculated risk. Vanguard made the opposite decision, right? We're going to backpedal. We're going to pretend we never cared about sustainability, and so you're seeing the examples on those two behemoths. But at the end of the day, this is just political theater. It's not actually moving any money.
And I was also going to add, there is a group called For the Long Term that is convening with Democratic treasurers and controllers. Colleen was at a meeting a couple weeks ago, maybe a couple months ago now. We were there, and so there are a group of treasurers and controllers and other state financial officers who are very keen to put forward the exact opposite message, and who are managing money with strong ESG factors being incorporated. And the other piece I'd say as journalists is that particularly, I feel like we have a little bit of an opportunity, maybe it's taking like a bad situation and thinking of it just more positively, in the red and purple states where you're getting some of these initiatives, but I think it's a great opportunity for journalists to actually report on what sustainable investment is, actually to go into some details and report on it from a very matter-of-fact position. And so I look at it, and we've been reaching out to the journalists in some of the red and purple states to say, this would be a great opportunity, instead of just reporting on these legislative or other initiatives, to actually take a little bit of a deeper dive into what does this actually accomplish, and why are people doing it, and why are investors growing in this space. That would be a more interesting conversation than just reporting on a potential proposal in the works. So we hope to see that happen.
Any other questions? Okay, if not, we exist.
Well,
We exist.
nobody asked, so we just formed this caucus, and we're up to 8 members already, so we are on a trajectory, if we continue on our current rate of growth, to have the entire Congress by a
That would
couple
be very
months.
nice.